Hello everyone and welcome to ICM's midday session. Today we had the retail sales figures from the United Kingdom, which came out better than expected and had a bit of an impact on the British pound against the dollar and other currencies. However, what was key was the announcement regarding Brexit. So still the EU officials, they believe that the main struggles are still there, and there isn't yet any solution to reaching a key Brexit trade deal. So this is what's in the European session. We're gonna move to the MetaTrader 4, talk about some patterns that are formed. Ahead of the US session, we're waiting also for the retail sales from Canada, which could have an impact on the market. While we miss key, the economic calendar is a bit shy regarding US economic indicators. So starting with the euro dollar, yesterday we highlighted this falling channel. This was clear: 1, 2, 3, 4, 5, 6 channels. We had the reversal, and then the market was able to break up out of the channel and rise exactly towards the resistance area that we highlighted, which was at the top, the previous top prices near almost 1890. And also today we got rejected from the same resistance area. So you can see here they're highlighted 1, 2, and 3 times we got rejected from this area, and now we're back almost to also a key zone that we highlighted. It was acting as key support, a key resistance previously, and then key support, and then now the market is holding at this. But in the bigger picture, as stated yesterday, we're just trading inside the bigger zone currently between 119.20 almost and 117.40, awaiting some key drivers that could press the market out of this consolidation zone that we're stuck in. So these are the key levels for the euro dollar: 1850, 1810 on the bearish scenario, and 1745, while on the bullish scenario 1890 and 1920 again. The British pound against the United States dollar, so we're seeing just a bit of a sideways move also between 131 level and 133 on the bigger picture, and now we're having a smaller zone that we're trading at between 131.80 almost and 133, which is the upper bound of this consolidation zone that we were stuck in. So investors are just waiting for a bit more clarifications on the Brexit talks. These hopes of reaching a Brexit deal following reports last week, they just supported a bit the British pound. However, we're still away from reaching a deal, but the market isn't yet in reaction. So watch out for any disappointment if there were like a clear statement about a failure of reaching a deal anytime soon. So this could weigh on the market again, and maybe we could be having a bearish scenario and falling towards 31 area again. The dollar against the Japanese yen, we highlighted yesterday also 103.65, which was a key resistance area here, and then the market dropped exactly towards this area and bounced away from it. So these are the key levels where we're trading inside the range that occurred ahead of the headline, Pfizer's headline, so between 1320 and 1570 on the bigger picture. And these are the smaller lines or zones that you can watch out for any trading. You can see how they are just clear that we had certain price action when reaching these zones. 103.65, any break below it could lead to a drop towards 103.20 again. So this is for the dollar against the Japanese yen. The dollar against the Swiss franc also still holding near the same support area at 90.90, which was previously also a key one. We were drawing these trend lines, but definitely we were having like breakouts, but they weren't key. Like you can see this trend line, we had this breakout from the trend line, and then a retracement to the trend line that was coinciding with the previous support, and now we bounce back higher. Just on the bigger picture, you just can trade the range. So it's almost a 100 pip range that we are trading in. So any break below the support, you can trade it like any support break, while a reversal higher could lead to a retest of 92. You can pinpoint a minor resistance near almost 91.38 and 91.50 area. This is for the dollar against the Swiss franc. The Australian dollar also stuck in the range, 73.40, 72.20, almost 120 pips range. We're in the middle of the range currently, so awaiting some more data from Australia regarding the impact of the latest lockdown. So this could just be the next mover. Currently we're trading inside this lighter consolidation zone, which is almost this wedge here, so watch out for the break out of this wedge. Trading back above 73.10 could lead to a retest of 73.40, while a failure on the break posting a lower low could just drive the prices lower towards 72.20. The New Zealand dollar is still on the rally towards further upside. Yesterday also we highlighted the confluence between the 50% Fibonacci retracement and the previous support zone 1, 2, and the 50% was exactly at this point. And then this was a key turning point for the market, and then the New Zealand dollar rose from there towards almost today's high of 69.40, so almost 70 points from yesterday's low. And we're currently struggling near the previous key resistance area that we've been highlighting for a while. 69.40, 69.70 is key for the New Zealand dollar. Any success in breaking above this area towards the 70 psychological area could lead to a bigger rally and then a trade in a bigger consolidation zone or a new consolidation zone. Previously 0.65, 0.68 was the consolidation zone. So if we go to the daily chart, you can see this area here. It was a clear consolidation zone for the past couple of months. So if we come closer to 70 and cross 70, we could be creating a new consolidation zone to trade in. The dollar against the Canadian dollar also, we talked about the 30-30 and then the 31 10 31 20 resistance areas. So definitely we're still trading in it. Maybe the retail size today could be a driver towards maybe a breakup or a breakout towards 3170 area, or just a continuation to the downtrend, where we're seeing also today a bit of strong movement for oil. This could support the Canadian dollar, and maybe a break below 30.30 could drive us to retest below 30 again, which we didn't test since almost November 10. So this is just for the dollar against the Canadian dollar. You can draw just this channel that we're trading in and highlight any break out of this channel. So you can see how it is working. 1, 2, 3, 4. So we have 4 points on the channel. A break above the upper line could lead to a retest of resistance 31.20 and 31.70, while a break below 30.30 could lead to a retest of the lower bound, which is almost near 130 psychological level, closer to this area that we've been trading at previously. Gold prices, they're consolidating near the lowest price range that we've been trading at for the past couple of days, so almost between 1850 and 1870. So we're in a slighter consolidation zone. 1850, 1855 continues to be key support area. We saw yesterday buying pressure when we were closer to this area, and then the prices succeeded in bouncing back. Now today you can highlight similarly to what we've done with these three that guided us towards this break here. So similarly, you can just draw the previous stops, which we currently almost approaching this area. On the smaller picture, you can just highlight this almost wedge that we're trading in. So you can just do like this and draw it, and you can see the wedge that we're currently trading at. So watch out for the breakout of this formation. A bullish breakout could lead to a retest towards 1885, which was key area for gold for the past 10 days, while a continuation lower or a break below almost 8060 could lead to a retesting of 1850, and maybe we could be able to breach lower and maybe retest 1842, 1838 levels, or 1825 at max, the level that we highlighted yesterday. So this is for gold. We need a bit of movers for gold to move again. So it's either just bringing back the topic of further stimulus that could be supportive to gold, or just like highlighting or focusing on the vaccine, which is just pushing, which succeeded in pushing slightly higher US yields higher, which also weighed on gold. So this could be these could be the drivers for gold in the coming days. Silver, also we had a pullback from the key support area that we've been highlighting, 323.50, 23.70, moved back higher towards the support area, which turned into resistance or key support following Moderna's announcement, and now we're still trading almost near this area at 24.70. The Dow Jones, moving to the Dow Jones, on the smaller period yesterday, it was a bit quiet for Dow Jones. So we had this fall on Wednesday's night, and then yesterday we were trading inside this consolidation. So continues to doing 9,530, continue to be key resistance. So yesterday we were here when we were doing the live session. Then the market rose exactly towards this area, making it a bit more valid. Any break above this area could to a retest towards this minor support, which could turn into minor resistance near 29,625. And if we are going to witness a strong rally on Friday, this could lead to a retest of almost 29,800 zone, while a failure here and a bit of bearishness on the outlook could lead to a further decline towards 29,000. We're just seeing a bit of changes in the market. So like if you go for the Nasdaq, you can see that the Nasdaq on the day it's a bit positive. The stay-at-home stocks, they're just benefiting from the resurgence and the soaring cases in the United States, while other stocks that were suffering the most from coronavirus, they're just having a bit of a bad performance, especially as these cases are still continuing, with the vaccine is a bit far away to be in use. So you can see here how the Nasdaq is just having a good rally, and now we're consolidating inside a key area following this sharp rally. So you can just highlight these recent bottoms, and just highlight this key area here, which was previously a key area in almost 12,050. So this is just a fast look on the Nasdaq. This is oil. So from the also trend line that we highlighted, the market just had a couple of retests and still trading slightly sideways up. So the 42.50 continue to cap any movements higher. So this continues to be a key level, while we're struggling quite below it. So this area clearing above 42.40, 42.70 could just lead to further rally and further gains, and the rise maybe towards above $43 per barrel. So you can just highlight this as a channel. So you can use the lower band and just go for this, and maybe look for a retest to the upper channel if we're going to have a bullish rally or a strong rally on oil prices, while a failure here and disappointment and a break back below the trend line could lead to a bigger correction and the retest of almost 41.30 and the bigger picture towards $40 per barrel. This is all for today's session. We just want to remind you that we have the Canadian retail sales figures, which could drive the Canadian dollar out of its current consolidation zone. And if you have if you want to follow up on our live sessions, you can just subscribe to ICM Capital channel, and you're going to receive notifications when we're live. And I would just like to remind you that all the information, news, analysis mentioned in this live session only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. You can see that we're just using classical technical, we're just relying on trend lines, channels, Fibonacci retracements, and you can see that we're getting a bit of quiet moves from the levels highlighted by using these tools. So it's just you need to have a bit of more experience with charts, and you will be able to find the patterns that you could trade in the future. So this is all for today's session. Thank you all for joining, and have a great weekend.